Good afternoon, everyone. David Paul speaking. It's Saturday, the 19th of May, and I'm looking at the front page of VectorVest UK. The trend on both the short term and the long term is still up, although the short term trend, what we call the primary wave, has in fact lost a little bit of its momentum, and we advise caution going in to trading on Monday morning. If I click on market timing and I pull up the market timing chart, here I'm looking at all of the shares in the London market that VectorVest follows, 2,200 odd shares. It's an equally weighted index, and as I indicated on our video last Thursday, the longest term measure of the trend on VectorVest, which we call a confirmed call, turned up on the 17th of April, about a month ago. As you can see, the trend losing a little bit of momentum up here at this old high, which is hardly surprising. Now, since the 17th of April, about a month, we've had an exceptionally good run on the London stock market. Now, on the last video, I looked at the top shares as ranked by VST, Value, Safety and Trend. But at VectorVest we have a very conservative method of making money. It's called worry-free investing, and worry-free investing uses a special search, and if I go to Unisearch I can find this for us very easily. It's under retirement, and we've got dozens and dozens of searches here for different types of traders and investors, but the search that we use for worry-free investing, which is our most conservative mechanical trading plan, is called Long-Term Winners RS Descending. And what this does is that it looks at shares that are above 50p. We're not looking at the AIM market, and they must have an average daily volume of 50,000 shares, or the 50-day moving average of volume is greater than 50,000 shares. Now, in this particular search, we actually sort by relative safety. Now, relative safety is a VectorVest metric that looks at the safety and the predictability of the earnings. So the algorithm looks at the balance sheet, the income statement, the cash flow statement over the last few years, examines all the financial ratios and makes a judgment as to whether these shares are in fact making money and all the financial ratios are getting better. And what I've done is that I've actually sorted by relative safety descending, and that brings the shares with the safest track record of making money to the top of the pile. That's why this is called worry-free investing. Now, I've already gone back to the 18th, and as we can see, we got our signal that the market was rising on the 17th, and we could have reacted to that signal on the 18th. Now, if I run that search on that particular day, these shares, Games Workshop, Berkeley, CompuCenter, Croda, Halma, McFarland, Cranswick, all came to the top of the pile. Now, folks, if I do a simple quick test of the top 10 over the last month, we can see that there's no losers, and that that portfolio has in fact outperformed the market by nearly 2x. And that's exactly what it's supposed to do. It's not going to shoot the lights out. Some of those shares may have paid a dividend in the last month, I'm not quite sure, but we've tested this back in the American market for the last 20 years, and it's produced twice the return of the S&P 500 over the last 20 years with very, very little effort. Now, the rules of the worry-free investing methodology are fully revealed. If I click on views, if I click on special reports, and I go down to guide to worry-free investing, it's all in VectorVest and put together by our founder, Dr. Bart DeLido. So you can click there on the rules. It's a mechanical method of making money in the stock market that's been tested over the last 20 years. Thank you very much.